Hello aspirants, today we are going to discuss about chapter 2 basics accountancy procedure of AFM paper. This is the backbone of accounting. Why? Because it will explain about concepts, convention and system that make financial reporting reliable and uniform. By the end of this unit, you are going to learn about key concepts of convention of accounting, why uniformity is essential in accountancy, and how the double entry system ensures accuracy. Now let's at the recording stage, accountants follow rules like cost concept, money measurement concept, and dual aspect. This ensures every transaction is captured consistently and scientifically. First, understand the cost concept. Every transaction is recorded at purchaser price. Every transaction is recorded at purchaser price, not at market value. Next, money measurement concept. This ensures all the transactions are expressed in common denomination. Like some amounts you should not express in dollars, and some values you should not express in rupees. You have to mention all in single denomination, either in dollars or rupees or euros. Okay. Next, business entity concept. This separate the owner from business. This means capital is treated as liability and personal expenses are excluded. What business entity concept tells us is owner is not equal to business. Business is separate entity from owner. Next, dual aspect concept. This tells us that every transaction has two sides, debit and credit. For every transaction, one account should be debited and other account should be credited. Together, these concepts form the scientific framework for recording transactions in the book of accounts. At the reporting stage, we will discuss about going concern, matching concept, accounting period concept, conservatism, full disclosure, materiality, and consistency. Now let's discuss about each point one by one. Cost concept. Under the cost concept, assets are shown at their purchase price. We already discussed about this. Not at market value. And depreciation allocates cost over time but does not reflect market fluctuations. For example, if you bought a machine at 5 lakh rupees, that will stay in the books at that cost only, even if its resale value changes. After some time, the depreciation, the value of the good changes. So, the depreciation allocates cost over time but does not reflect market fluctuations. Okay, book value is not equal to market value of an item. This is called cost concept. Now let's discuss about money measurement concept. Under this concept, account records only what can be expressed in money, only money transactions. This ignores non-monetary factors like employee moral, all those things. Okay. Why this money measurement concept is important? Means this makes comparison possible. If you want to compare balance sheets of two companies without money measurement concept, you don't know which company performed better, which company performed least. For the comparison, this money measurement concept is very important. Now let's coming to business entity concept. In this concept, owner is separated from the business. Owner is not equal to business. Capital is always a liability, and personal expenses are excluded from business account. Then only this ensures clarity in financial reporting. Okay. Always remember, capital is liability. In realization concept, revenue is realized only when goods are legally transferred to the buyer. In this realization concept, revenue is recognized, ownership passed. At that time only realization occurred. Okay. No future income considered. Anticipation income is ignored until earned. This prevents overstating of profits, and you can avoid double entry also. The realization concept tells us when revenue is considered only when ownership passes to the other person. Okay. Sales on approval also excluded. Dual aspect means every transaction affects two accounts. One account from debit side and one more account from credit side. One account balance will decrease and another account balance will increase. This is the basis of double entry bookkeeping. Always remember this formula: assets equal to capital plus liabilities. This is very important formula in dual aspect concept. Under the going concern concept, business assumed to continue indefinitely. Earlier we discussed like business is not equal to owner. Business is separate entity, owner is separate. Even though business owner will changes, but business is continue forever. Going concern concept assumes the business will continue. This underpins depreciation, reserve, and investor confidence. If liquidation is expected, assets would be valued differently. No one is ready to close their businesses. In case in bad position, the assets valued at cost, not liquidation value. Okay. Under the matching concept, we have to match revenues and expenses of the same period. We should not match the expenses of one particular month to expenses of other month. Okay. Under the accounting period concept, we are reporting annually and quarterly. Based on that annual reports only, we will pay tax and we will give dividends. Okay. Matching ensures expenses are aligned with revenues of the same period. Keep remember in mind. This is very important topic, conventions of accounting. Under this full disclosure concept, what it tells us is all material information relevant to stakeholders should be presented in financial statement. Whatever happened in the company should be clearly disclosed. This includes notes, contingencies, and accounting policies. Transparency builds trust and ensures user can make informed judgment. Next, materiality concept. In this materiality concept, only information significant enough to influence decisions. More details that don't affect understanding can be ignored. For instance, small stationery expense may be written off immediately rather than tracking in detail. According to this materiality concept, our focus is only on high materiality transactions, not on petty expenses. Next, conservatism. This is very important topic. Conservatism. The name itself indicates caution. When we are facing with uncertainty, accountants should recognize potential losses immediately, but we realize gain when they are occurred. Anticipate no profit but provide for all possible losses. This prevents overstating of financial health. And the final one is consistency. This consistency ensures us comparability. If we made balance sheets every year consistently, then we can compare the previous year balance sheet with this year, and we can compare it to other companies also. But conservatism is very important topic banking exam point of view. What is the importance of double entry system? Why we are following double entry system? In single entry system, that is incomplete and unscientific. Means if we debit one particular account, where that amount have gone, we don't know. In double entry system, we can trace of both debit and credit. This is the foundation of modern bookkeeping. And finally, I want to tell you that accounting concepts and conventions provide the framework, while double entry ensures accountancy and recording transactions. Together, all this form a trusted language of business. If you like this video, please subscribe to our channel JAIIB Simplified. Thank you.